I should be okay now on the audio. I apologize for that. I had the wrong. I had the wrong thing selected. So I had a virus earlier this morning, and it caused all my settings to be lost. So that's what I was doing, basically coming in here, was trying to set all the audio. So hopefully that'll be good. Thanks to the intern for telling me that I did not have good audio. So I do appreciate that. And so basically with Tesla, basically what we're looking at here is going into earnings. I do think we're going to see it hopefully firm up and move a little bit above the 425 level. I have sold a call at 450. That's for October 30th, and there is a new buy point on Tesla at 502. So that's kind of where we're at in terms of Tesla at the moment. So that hopefully, so stay tuned, because it's going to be a big day for Tesla on Wednesday, and we are expecting them to have very good deliveries, very good vehicle deliveries, and a better and increasing earnings per share. So buy or wait after earnings to Tesla. You know what? At this point, I think it's probably best to wait until after earnings to buy Tesla. I do think, though, there is the danger that they are going to surge when we come to earnings, because the vehicle deliveries are up, and that actually can be absolutely verified. So with the vehicle deliveries up, it's very likely that their earnings per share will surge. Now, the Wall Street is expecting that to go up about 49% in terms of their earnings per share. Now, you never can tell, because sometimes they will, sometimes they won't. But I would probably, at this point, I would wait until after earnings, and then if the earnings are good, I would probably jump in, because I do think that, if the earnings are good this time, with the relative weakness of the rest of the market, I do think it's going to probably move higher. And so, but I wouldn't go in before, because we could have a disappointment on the earnings on Wednesday. So that's the thing. We're really close right now, and I'm not so sure that it's going to be the best time to be in it. Currently, it's trading for 432.64. So that's kind of where it's at. All right, yo, absolutely. So let's see. What a day. What about AMD? Is it cup with handle? Okay, let's look at the AMD really quick. This is just a great stock. It's funny. This is this company that was asleep for just years and years, and then with the new management, wow, it is doing great stuff. Just have to say that. Yeah, we definitely don't. This is what they call a consult. This isn't really a cup base. This is what they call a pocket pivot. It is sort of a small cup. It's called a consolidation base. And the only reason it's not a cup base, is because it's only 7 weeks wide. If it were wider than this, if it were 10 weeks wide, that would be considered a actual cup base. But it does kind of act like a cup, in that it is definitely a consolidation, and it is buyable at this point. Now, I do think that we want to take a look at the daily to see how it's trading on the 50-day, but it looks like we're right at the 50-day line. So the question is, where is it buyable? Well, right now it is on the 21-day exponential, and that is at 88.72. Currently, it's 82.10. That's actually changing, and it's pulling back a little bit below the exponential. This is a cup with handle. Formation. Absolutely, it is a cup with handle with formation, and the pivot on it is 88.72. So let me put that out there to everybody. This is AMD, and it's a cup with handle. And the buy point and the pivot is equal to 88. Let me give you an exact number on that, because I have it calculated here. 88.72 on that. So that will give you exactly the pivot, 88.72. Now currently, 72. There we go. And I'll put that out there for everybody on the chat. Now, if you're looking on if you're looking on TikTok, I'm actually simulcasting this on YouTube at youtube.com/Dallas Trading Floor. And on Dallas and on the YouTube version, I am giving the buy points for these stocks as the questions are asked from the chat. This is for ones that have solid buy points. It looks as if AMD does have a solid buy point at 88.72. Now, currently it's selling for 82.13, so it's slightly below the buy point. If tomorrow or the next day it moves up with power, and right now it's retreating, so it's not the actual time to buy. It's time to get ready to buy it, but not buy it at the moment. When it explodes through that buy point at 88.72, if we get an up day, that's where you want to buy it, because if you buy it as it's moving higher through that buy point, you're going to get it move up seriously, because it's a cup with handle formation, and this is the very best of the chart patterns. So thank you for asking that question. That's a great question, and AMD is a great stock. So that's a great thing to say. Are we in upturn? My portfolio currently isn't reflecting that. Very good question. We are in a confirmed uptrend. I know that's hard to believe, because it looks as if everything is going sideways. Really, what we're doing is that the market is waiting. It seems as if it's waiting for confirmation on the election. I mean, that seems to be the thing. The stimulus, the election, and that's kind of what it's saying. But according to the charts, we are actually in a confirmed uptrend. I know that sounds hard to believe, because there have been so many down days, and it's been so weak in terms of where we're going at that. But let's look at HTZ to see kind of what we can see there. So HTZ is the symbol on that. And that Hertz Global Holding. Yeah, Hertz unfortunately did declare bankruptcy, and so it's been a very troubled stock. Currently, it has a relative strength of 15. It's popped up a little bit. I would really kind of recommend possibly exiting this if you have some good stuff on here. So let's look at the checklist. This is a terrible checklist. It's 3 out of 9. It is not buyable. 6 out of 9 on the O'Neill checklist. Let's see if it's buyable on the Warren Buffett checklist. It's not even buyable on the Warren Buffett checklist. So HTZ, Hertz, I don't think you want to be in the stock. If you have a profit, I would recommend selling and taking the profit that you can. This is a bankrupt company, and it is very dangerous, especially because if we see any weakness, if we see a pullback in the market, this could get hammered even more. I know that it's only $2.22 and everybody's heard about it, but this is something I think you want to try to exit as soon as possible. This is not a good stock, and it's going to be a problem for you probably going forward. So not to be negative on this, but I just think you need to get out of it. It just doesn't. It's just not where to be. Now, if you've lost a lot of money on it, here's the thing, and this is a very hard lesson to learn. I had to learn this over many years. It's best to take your losses now and then find something that's going to move up, something like something like an AMD that's going to move up. Hertz just, it sounds like a bargain, but here's the thing in stocks. You don't want to buy bargains. I know it sounds strange, but basically we're buying to resell. So we're buying inventory. So we want to buy the best inventory that we can, because we're going to be reselling that. So it's very, very, very important on these weak stocks to basically just be really super careful on them. Don't go into them if they have this kind of relative strength. It's a very, very weak stock. So, it's a big tuition. I hate to put it out there, but if you want to understand why this you wouldn't want to buy a stock like this, I recommend going to my website, which is dallastradingfloor.com, www.dallastradingfloor.com, and checking out this book. This is an important book. It's written by William O'Neill, and I think that in the last probably 30 years, this is one of the most significant books that's been out there, that's been written regarding the stock market. And this is the CAN-SLIM system that I use. So these two books are very important. How to Make Money in Stocks, a Winning System, Good Times or Bad, and also the companion volume by Matthew Galgani, How to Make Money in Stocks, Getting Started. This is more of a checklist, sort of like the Cliff Notes, and this is the actual book. But you need to basically focus in on these books, and you will understand why you don't want to be buying stocks that have a very low relative strength like Hertz. So I'm not trying to gang up. I'm just saying that this can save you a ton of money and hopefully make you some money as well. So that's the thing there. Bought Tesla today, but it doesn't look good if we get a stimulus package, and if we don't get a stimulus package soon. We'll be stopped out of apps at 33. Yeah, I know. Yeah, Digital Turbine has been pulling back. I do think we're likely to get a stimulus package though, and I think long term, Tesla is absolutely beast, and there's a lot of anecdotal evidence for me here in North Dallas. I'm driving around, and here we are in Dallas, which should be the oil capital of the world. And guess what? I see a lot of Teslas out there. So I just think that we're at the beginning of an electric vehicle revolution, and I don't think I'm going out on a limb on that. I really don't. So I do think that Tesla, even though it might pull back a little bit, I do think this earnings probably is going to be quite good, and it's an area that you might want to look at. Now for apps, let's take a look at apps. This is Digital Turbine. I hold Digital Turbine too. So again, I'm hoping this thing will move higher. It's pulled back. It's going to pull back to the 21-day moving average. So let's take a look at that chart. Basically, this is that green line here. That it seems like it's pulling back to that 21-day. It's pulled past the 10-day, and it's pulling back to the 21 days. So I don't foresee that this one. I think this one is still going to move higher. It just has to keep above about the 34.97 price, and that is where the 21-day line is. So let's see if we can put a line in there that kind of give us an idea of sort of that the slope. I'm basically looking at it to stick at the 21-day line. So it potentially could move back as low as 34.97. So we are, we're with about $2 off of that. So I do think we're going to see a bounce on that, but the question is when, and earnings are in about 10 days. So again, I'm a holder of that. So, I might get stopped out too. This is a reason why it's so important to have those stop losses in there. And I recommend, at least initially, going in with a 7% stop loss. So in order to calculate that number, whatever you paid for the stock times 0.73 is going to give you the number that is a good thing to come at. But I do think we're going to see a bounce off the 21-day exponential. So hang in there. Hopefully, I have a voice now. I'm sorry about that. I should be on the voice. I had an issue with the I didn't have the thing switched properly, so hopefully I have that up now. We can't hear. Okay, sorry about that. You should have that now. Hi Jim, what are your thoughts on DOC and RMG? So let's look at DOC. Sorry about that on the sound. I should be, I've done this enough times. I should be an expert at it, but I had a little issue with, unfortunately, with a virus on my Macintosh. Can you believe that? And it switched out some of my settings. So I apologize for that. Hopefully that won't happen again. But let's take a look at DOC. This is Physicians Realty Trust. It's okay. 1749 is the price. Let's look at the buying criteria on this checklist. It's good. It's definitely good enough. 6 out of 9. That's my minimum. Let's look at the ownership. We do have increasing fund ownership. That is good too. So on that, we're pretty good. The only issue that I have really on this, it has a relative strength of 49. I like to have a relative strength of 80 or better on this. So it does have a cup with a handle formation. I don't think I would buy this right now, but I would possibly watch list this one. It does have a buy point of $18.99 on this one. So the DOC buy point is equal to $18.99. So let's put that out there on the chat. Here's the thing. Everybody was looking on TikTok. I do run run the charts and everything, and hopefully the sound on YouTube at youtube.com/DallasTradingForce. So let's see if we could take a question from TikTok. I've been neglecting you. Call back here. Okay. I'm holding Apple shares for the long term. Is that a good idea? Should I try to sell before the elections? Very good question. Apple is a great stock. I'm not going to kid you. The issue with Apple though is it's been sort of priced to perfection, and so it's seeing a bit of weakness. It's been in a trading range from about 113 up to about 120 and that just seems to be where it's holding. I can show you kind of why I think that is the case. As you can see, there's this green line here. This is the 21-day exponential moving average, and it is pulled below that. I suspect it's going to pull up in towards the end of the week. It's still got a relative strength rating of 92. This is excellent. It definitely has struggled to gain back from where it made its peak here right at the day when it did split 4 for 1. The peak was 137 on a split adjusted basis, so a little bit over $500. It has not recovered since then. And if you've been watching me for a while, that was my theory, is that we would, the best thing to do with Apple was to sell it the day before it split 4 for 1. Why? Because that typically was the height, and that's been the case, unfortunately, since that time. So should you hold it long term? Well, it is increasing, and it does have good relative strength, so it will perform well. But is it going to perform like it did into the split? No, I don't think so. Now, I do think, though, there are some other alternatives that are big cap and that are potentially very, very good. And I'm going to be probably putting out an action trade alert on this. And that is Nike, NKE. Nike is changing Nike is going to change it. Nike, or I always get this wrong. It's changing its retail model. It's going to go a lot more direct to consumer, and so this is probably going to supercharge the stock. Also, so I think that's one you might want to look at. It seems to be doing well, even though we have a weak market. It is down a little bit today, but only 75 cents, and it has a good relative strength. So this is the one I think you want to watch list as a potential, as a potential surge into the end of the year. So that's kind of the that's kind of thing. So RMG is the next one that you were looking at. Let's look at that. RMG. And that's Ring Acquisition. I wonder if this is Ring, if this is the Ring company, blank check for the purpose of affecting a merger capital stock. Okay, see, I can't really tell you very much about this one. I know that SPACs are very, very popular, but I can't really give you a read on it because I don't know what they're going to be acquiring. So RMG Acquisition, I probably cannot give you I'm probably going to have to get back to you on that. I don't think I can give you an actual, an actual thing on that, unfortunately. So hopefully we let's see, yeah, okay. So we should have sound now. Okay. No sound. Okay. Sound. There we go. No sound. Okay. Okay. I think we need a do-over. Okay. Common man. Okay. Today is important. Mute. Okay. Don't want to do this. Okay. To the loan and the team. Can you replay with sound? Okay. Well, okay. Hopefully I'm getting sound out here. I just want to make sure that I'm checking everything I've got. I've got that on. I've got that all the way up. So I should have sound. Let me check my mic again here. I always seem to have problems with this. We did have a video. Yeah, there we go. We should be with sound. We should have sound now. So I am so sorry for that, that I didn't get that right. Okay, so it works now. Okay, great. Okay, there we go. Sorry about that. Please go over for the beginning. Okay. All right, I will definitely come back and revisit some of the things that we said earlier. So I will definitely do that. Thank you for bringing that to my attention. Should I buy Autodesk? Well, let's take a look at Autodesk, see if I can give you a good idea on Autodesk. Just taking a look here, make sure that I have the right symbol for Autodesk. Well, goodness gracious, we don't seem to. All right, let's go back here. I think it's Auto. AUTD, I think is it? Is Autodesk? No, I don't know on that one. So let's see if I can get a on that. Let's go to and desk symbol. Okay, ADSK. Sorry about that. I should remember that. ADSK. ADSK. So there we go. There's Autodesk. Pop up the chart on Autodesk. Take a look at it. Is it a buy now? Well, let's see. Definitely, it's pulled into a buy range. Wow, that's a good call. It's got a cup. It is right. It is right south of a buy zone. Let's look at the buying criteria. 7 out of 9. That's very good. Ownership is increasing. Yes, it is good. Boy, this is looking good to me. 59% funds. Wow, this is good. We've got an 88 rating. I would say this is definitely a buy. I would definitely say this way. It's pulled back a little bit today, but the pivot on Autodesk, and let me put that out there, ADSK pivot it equals let's see, 261 94. So what does this mean? As I put all that out there in the chat, well, what does this mean? Well, what this means basically is that if it has a little bit of resistance right now at this pivot, which is 261.94. If it moves beyond this on high volume, it's likely to move much higher. So that's what that pivot means. It's on a cup without handle formation, so it may pull back a little bit. I wouldn't buy it right at this moment. I would wait until it started to move higher. And when it starts to move higher and it moves above that pivot, that 261.94, that's when you can probably safely enter the stock. But definitely a watch list. Great stock. It's lining up. Everything is looking pretty darn good on it. And it's looking pretty darn good on that. So hopefully that's better. Okay, Fiserv, FISV. Let's take a look at that one. FISV. Ooh. Let's look at that chart. Okay, great. Fiserv. Yeah, this is a great stock. Very, very good call here, by the way. Really like that. Yeah, Fiserv is a good company. It is off a little bit today. It is trading below its 200-day moving average. That's something I don't kind of like to see. There's a relative strength of 32. Another thing that I kind of don't like to see right now. Let's look at the checklist. Well, 5 out of 9. That's not good enough. And it does have it has decreasing fund ownership. So here's the thing on Fiserv, and I have to be very honest with you on this one. Unfortunately, it's a great company, but I wouldn't buy the stock. It's not in a place where you can buy it right now. The chart is not strong enough for Fiserv, and I think you want to keep your powder dry on that. Unfortunately, you just want to, because I don't think it's a strong enough stock, unfortunately. So I'm sorry to say that one doesn't probably work. You maybe want to do a little bit of a definitely watch list. It's a great stock, but Fiserv I don't think you can do. Now Tesla's different story. I do see Tesla actually surging after its earnings on Wednesday. Now hopefully they'll be good. Their vehicles are up 30%, and the thing about it is that with Tesla, the whole story is, can they get the production up? If they can, they have orders, so they're going to make money if they can get their production up. So it's all about the production with Tesla. I just see Tesla as pulling back to the 21-day line, but I still see it in moving right up that 21-day exponential. So I'm in Tesla, definitely. I'm a Tesla bull, and I do think it's going to continue on giving out. It's moved a little bit down today at 430. By it's the Wednesday's going to be the tell, but there's a new buy point on it at 502.49. So I still think you could buy this one. 99 relative strength. I don't think it's necessarily going to gap up like it has before, but I do think this is moving up. And let's look at what they're saying on the checklist. It's still a good checklist, and it does have a fail on the EPS rating. But the thing is, that's due to the fact, that may be fixed by Wednesday. So I'm still very bullish on this. The sales percentage up over last quarter is less than 20%. But here's the problem. Here's the good, the bad, and the ugly with Tesla. With Tesla, it is a production issue. most companies, sales are not, they have to, getting sales is more difficult. Tesla has basically pre-sold its whole production. The question is, can they get the production level up? And if it does show that they have produced 30% more cars, then I think it's going to be moving up again. So don't short Tesla, please. Don't short Tesla. Yeah, don't short Tesla. It's just not worth it. Should I pull money from the market before election day? You know what? That's not a bad idea. That's not a bad idea at all. The election is so difficult to call. I mean, the best poll that I have seen is the IBD poll. By the way, it was the only major poll that actually correctly predicted the Trump victory in 2016. What that poll is saying right now is that Biden is leading coming into the election, but his lead is starting to evaporate. And so it is just an incredibly close call in terms of the election. I mean, what's going to happen? I just can't say. That's why it might be a good idea to be de-risking a little bit, just because I'm kind of putting my buys on hold. I'm kind of being a little bit cautious going into the election as well, because I do think that it could force the market down. So we've got to make sure that we have our stop losses set as well. Make sure you have your stop losses in there. I don't think we're necessarily going to get a run, but if the stimulus doesn't come in a timely fashion, I think it could be deadly. So we will see. But I do think the stimulus will come before the election. But I just don't have a crystal ball on that. So pulling money off the table right now is not necessarily a bad idea. That's really what I want to say. DraftKings, DKNG. Let's look at DKNG. DKNG. And thanks for holding on through my sound difficulties. DraftKings, unfortunately, is just not looking good. The chart has moved against us, and as I always say, I'm a trend trader, so however the trend is going, that's how I'm going. And right now, the trend is unfortunately going the wrong way. We did have a nice buy today. It looks like people are buying it, so it looks like it might be turning on this 50-day moving average, but be very careful on this. I kind of want to see some more confirmation. We do have a buy. We do have a buy on a consolidation basis, third stage base, at 44.79. We're currently at 44.58. So we may have a very strong. We could have a rebound on this stock very, very soon. Right now, it's just tough to have been in this. From about the beginning of October, it's been solidly moving lower, but I do think we're possibly seeing a turn here based on this chart. I'm looking at this chart and I'm seeing this up arrow on very good volume. So I do think we're at a turn. We're 6 out of 9. That's the minimum, and that's good. The funds are definitely moving up. That's good. So here's the thing about DraftKings. This one very much could turn. So look at this one to turn. I'm going to put this down in my book, because it does appear that we may be getting a rebound on DraftKings. We may be getting a rebound. So I'm going to put in my list DKNS rebound. Okay, and I do think we may be getting a rebound on this one. Maybe we want to wait for a little bit of more confirmation, but this is a good stock, and it looks as if we are right in a buy zone. So I'm going to put that out there on the chat. DKNS buy point is equal to 44.70 is what its buy point is. So for everybody out there on the chat, that is the buy point on DraftKings. It's an excellent play, and I do think it's an excellent company. So but it's been pulling back since the beginning of October, and it looks like it may be in the first stages of doing a reversal off of the 50-day line. So this might be a very good place to buy it, actually. It's got a relative strength of 98. So thank you very, very much for that question, Wendy, in Calgary. So let's see. Thoughts on TDS. This is the Trade Desk's interesting company. This TD TDD is a company that basically supplies a platform for selling online advertising time, so you don't necessarily have to go to Google or to Facebook and on other sites. So it's sort of a very important it's sort of an important business. It has been pulling back as of late. We're currently at 618.29. Let's see if we still have a good checklist on it. The checklist is still quite good, 7 out of 9. I like that. The ownership has been increasing. That is good. We do have some good funds in it. We do have increasing fund ownership, but and it is a relative strength of 97. It looks like it's picking right up to the 10-day exponential 10-day moving average, and we have had some strong. We have had some strong buying. There was some selling, and then, okay, so I do believe that this one probably looks like it has settled. Interesting. Now this is going to be very, very. This is going to be tough to trade into the election, because I think a lot of the revenue depends on political ads, and so I just, boy, this is a tough one. This is a tough call. I would possibly go into this, but no more than a half position. And what I mean by that is that if you take your portfolio, you divide it by 8, and then that's going to be 8 full positions. A half position would be half of that. I just think that it's really kind of, if you have profits in this now, I would kind of recommend possibly taking some of your profits off the table, but it's still looking very good. I mean, it's got a 97 relative strength, and the chart is not bad. Even though it's pulled back, the chart is still looking fairly good. So, but I would be very careful, set my stops on it. This is just a tough market to trade right now because it is getting so choppy out there. So choppy. So let's look at BE. This is an energy company. So let's look at BE to see if we can come up with anything here. This is Bloom Energy. And let me see if I can give you a good idea on Bloom. Thanks, Kay. Thanks for coming in here. It is pulled down to the 21-day exponential. There is a buy point on it at 1967. We're at 1834, so it's off a bit today. Earnings are in 10 days. I don't think I would be going into this one, but if I had it, I probably wouldn't be selling it, but I wouldn't be buying more of it. That's for sure. The checklist is 6 out of 9, so we're still good on that. We do have increasing fund ownership, so that's very good. It looks as if it's pulled right back to the 21-day exponential. It has a relative strength of 98, so that's excellent. But there's been a lot of selling as of late in this issue. 42% are owned by funds. So here's the thing I would do on this. I would I wouldn't, if I were in this, I would not go in it with any more capital. And if I had profits, I'd probably be considering taking some off the table right now just to protect my gain, but I don't think it's time to get totally out of it yet either. So I'm sorry about that. Okay. BB and BBTO. Let's look at BB. BB. That's BlackBerry. And of course, BlackBerry is a famous company. Used to be called Research in Motion. That used to be the name of it. Used to be called Research in Motion. It is kind of becoming a penny stock, though. It has a buy point, but the buy point is only at $5.66. I just can't recommend the stock, unfortunately. I mean, I like to recommend it because this is once of the fallen angels. This was once an absolutely unbeatable company when it was called Research in Motion, but they changed the name to BlackBerry, which of course is their most famous product, and just has not been able to recover yet. It's under the 200-day moving average. Even though there's stuff coming into it, I just can't get excited about this stock. If you're not in this thing, I wouldn't get in it. I don't think it's going to end well. It looks like it's probably going to move lower. So that's my kind of take on BlackBerry. So sorry about that. Buy point on SPWR. Let's look at SPWR real quick. SPWR. Oh, SunPower. Boy, it's looking good. Manufactures high performance solar towers. This has been a really strong sector of the market for some reason as of late. it's looking pretty strong. No real buy point on it though. It seems to just be marching up the 10-day exponential. I have to see why this is the case. I have to look. The checklist is good, 6 out of 9. I like that. Let's look at the fund ownership. Yep, the fund ownership is up, so that's good too. I don't know what could be driving this. 98 on the relative strength. That's really good. Earnings per share. It just people seem to be interested in this group. So, do we have earnings that are going to look good? Well, we're still losing money, so I don't like that. We're 64% funds. For some reason, there seems to be a lot of people following this. I can't really figure this one out yet. The chart looks good. The chart looks good, but I have no real buy point on it. So I really have to. Boy, I can't really give you. I can't really give you a idea on this one. The only way to really buy this is if there's a pullback to the pullback in reverse to the 50-day moving average, which is about $11. So right now it seems to be moving right up the 10-day average. So that's showing a lot of strength, but I couldn't really buy it at this point. I just can't buy it because there's no real base on it, and it doesn't meet my criteria for buying. But it is performing very, very well. So it's performing very, very well. ENT. Let's look at ENT real quick here. See what we've got on that. ENT and let's see ENT. Okay. I didn't get anything on that one. That's interesting. Thanks, Mohammed. ENT. Let's see if I can get ENT. There we go. Let's see if I can get a chart on that one. I can't seem to get a chart on ENT, so I apologize for that. Let me see about somebody off of TikTok. Okay, where do you see Tesla? Let's see. I'm new to trading. What's the best route to learn? Hey, absolutely. This is a great question. Thank you so very, very much for staying on and taking it. How do you start learning about how to trade? Well, I tell you what. Many years ago now, I'm getting kind of old. This is terrible. I was introduced to William O'Neill and his system of trading called the canceling method. And you know what? I've tried other methods, and I have never found one that is nearly as good as this. So how do you learn this canceling method? Well, you go to my website, www.DallasTradingFloor, and then right over there are the 2 books: How to Make Money, How to Make Money in Stocks, a winning system, good times or bad. That's this orange cover here. And then How to Make Money in Stocks, Getting Started with Matthew Galgani. That's kind of like a checklist. Buy these both together because they kind of reinforce each other. But if you read through these books, and they're easy read too, you will get an idea of kind of what I am talking about, what kind of system I'm talking about. So that's a very, very, very good question about how to learn how to read stocks. So that's very, very good. Do you see Fastly recovering or dipping even more? Good question. Thank you. And this was a call on my action trade alert. So I was a little bit bummed about this one because it was set up so nicely. And then, of course, it just got whacked. So this happens sometimes. Do I see it coming back? You know what? I don't. And then here's why I don't. Let's look at the weekly chart on this to see kind of what I've fallen and I can't get up has happened. We're still at 98 relative strength. We do have earnings in just 6 days, but we have fallen below the 50-day moving average. So there might be a re-entry point on Fastly, but right now I don't think you want to because it's showing a lot of selling. So unfortunately, I think that maybe you could want to watch this, but unfortunately we have dropped. It still has a very good checklist, 7 out of 9, and it does have some fairly good fund ownership, but I think that this one, unfortunately, at least for right now, is a little bit dicey. So I wouldn't recommend moving into it right now. I would recommend possibly watch listing. It might come back, but I just don't think it is a good time for Fastly right now because of its drop. And unfortunately, I had to say that. Okay, so let's see. Tesla, okay. Do you think, what do you think about, okay, I don't know about that one. Fastly. What do you think about Neo? Okay. Well, interestingly enough, and Neo, I've traded Neo before in the small portfolio. Oh, by the way, I will show you that in just a second. But Neo is a Chinese electric vehicle manufacturer, and it did actually get a very good review from JP Morgan, which is kind of interesting to see. It's just, it's continuing to be very, very good. It's moving right up this 21-day, meaning the 50-day moving average. So it still has a relative strength of 99. This is on the weekly chart. Let's look and see if we've improved on the buying criteria. We have a really good checklist here, 8 out of 9. Wow, that's pretty good. Also on the funds, we're looking very strong on the funds. 409 funds are in it. So it does seem like something's going on over there. Let's see if there's an entry point. Wow. Okay. Well, it's just continuing to move up at 27. So where could you buy this thing? Well, it's definitely had some serious buying. It's pulled back. I do think that there's maybe a potential buy point on this at about the 10-day moving average, 2374. It's at 2764 right now. I think the best thing, this is not this is definitely a watch list. I do think this is buyable. I do definitely think this is buyable, but we have to wait until it pulls back a little bit. But I do think we have a buyable stock here. Would I buy it at this moment? No, I won't buy any stock when it's pulling back. But with this one, I do think that it is buyable. So there you go. I may be sending out a trade alert on this one on the small portfolio. So, oh, by the way, to show you the small portfolio, it's super easy. All you do when you go over to the website, Dallas Trading Floor, is I do have this thing called the model portfolio, small portfolio, and here's how it looks. It's basically just a spreadsheet that is on Google Sheets that has permission on. This is how I'm trading currently. This is what I hold: Taiwan Semi, Tesla, Qualcomm, Cloudflare. I'm not doing so well on digital turbine. I maybe have sold out of this one, and I don't typically let them go more than 8% down. So I may be out of this one. I don't know. And I'm awful tempted on Viva as well, but I'm also in cash. So this is the small portfolio, and it's a good way to take a look at what my watch list is. I have the watch list down here, and I update it basically on pretty much a daily basis. I'm putting stuff on or off the watch list. So how do you get that? Well, it's easy to do. All you have to do to find out about the small to get a link to that is to go over to the Dallas Trading Floor, and let me show you that website right now. This is the Dallas Trading Floor website, and there you go. There is a little thing you can sign up to get the action trade alerts. Those are here, first, last name, and email address. Just hit that subscribe button, and of course it's all free. And then if you want to get a link to the action trade alerts, and of course this is free too, first, last, and email, and then hit that submit, and then you get that link right to the small portfolio. So that's a great way to go there too. So let's see if we have another question. ESS thoughts. Well, let's look at ESS to see if there is something I can find out about ESS. ESS. All right, there we go. Essex Property Trust. I don't like the direction of this. I don't like the direction of this chart. I have to admit, we're moving. This is a kind of a chart you don't want to buy. We're moving from the upper left-hand corner to the lower right-hand corner. Don't like to see that. It's got a relative strength of 10. That means 90% of the market is doing better than this is. So I don't like that. Also, the checklist on it, well, it's only 5 out of 9. I need 6 out of 9 for minimum for me. What about the fund ownership? Well, we've got decreasing fund ownership. I would say this is a big no. So ESS, I don't think you want to be in this one. I think you're going to lose money if you buy this in the next few months. That's what the charts are telling me. They aren't always right, but they typically are pretty right, actually. So that I don't think that is going to be very, very good. So ESS, I think you want to cross that off your list. I don't even think it's worth, and fortunately, I don't even think it's worth it for a watch list stock as well. Let's look at Netflix, Nflx. Netflix, of course, one of the great stocks of this last year. And it looks pretty good. I mean, it's pulling back to the 21-day exponential, but at 532, it's not bad, actually. It's within, it's sort of within a range now. It's in a consolidation range. the consolidation range goes from about 466 on up to 575. So it's in a consolidating range, but it is trending higher. So that is a good thing. The question is, when are earnings? Well, earnings are in one day. This is not, you don't want to buy it in front of earnings. Let's see what happens after earnings. This may pull back significantly on earnings. So I might have, it's unfortunately, I probably should have had a options play for you on this, but I do think that there's a very, this may do very well in earnings because of the COVID thing, but I don't think you want to buy it at this point. I think you want to wait until after earnings on this. So please wait until after earnings, and I think you'll be better off. This is not something, if you're in it, that's okay, but I would set my stop losses. I do think this thing might go a bit lower, but it's really hard to say because it does kind of do very well in the COVID environment, and because basically the theaters are all closed. So that is something that I wouldn't be looking to buy it, but possibly buy it after earnings. I don't want to buy it now. I think I want to watch this and possibly, and possibly, buy it after earnings. Here we go. True, we ordered Tesla 3 weeks ago and still waiting for delivery. See, this is folks, this is why I like Tesla so much. Even though in many ways the economy is really strange, it's just weird. You got a company here, Tesla, that's making vehicles and they're not advertising, and yet they're all pre-sold. So it's a question about it. It's all about production with Tesla. The more that they produce, the more they make. And I think their numbers are going to be pretty good. So this is one of the reasons, don't count Tesla out. This is sort of my one exception, but typically, I'm a seller before the earnings and then I buy afterwards. But with Tesla, this is like my one exception. I do think that they're going to be stronger after earnings because I think the delivery numbers are going to show that, that it's doing better. So that is definitely true. I mean, if you go down to your Tesla place, it's going to be hard. It's going to be hard to get a Tesla. There's not enough of them right now, believe it or not. I'm sorry, DraftKings. Oh, DKNG. Sorry about that. I'm sorry that I gave you the wrong info. Apologize on that. DKNG. So let's see if I get. Oh, I sent out the wrong. I apologize. I sent out the wrong. Buy point. Yeah, draft. I apologize. Yeah, you're right. You're absolutely right. Thank you. Yes, it's DKNG and not DKNS. For some reason, I put it out wrong, but it is still the correct buy point on that. So, thank you for correcting me on that as well. What about Nvidia? Okay, Nvidia also. Nvidia last year was the most the highest gaining stock out there. So Nvidia has been good. It's pulled back a little bit as of late, but it's still pretty strong. The question is, can it go higher? Let's look. It looks as if it's pulled back to the 21-day exponential. I kind of want to see. Let's look at the weekly chart to see if there's any room here, if there's any way to buy this thing. It does look, yeah, it still looks like it's buyable. Believe it or not, there is a cup base on this with a 569 a 569 pivot, which is really excellent. Actually, it's off $12 today, so it is pulling back to that 21-day. I wouldn't buy it right at this moment. It's basically in 30 days we're going to be seeing earnings on this. I do think the earnings are going to be very good for Nvidia. Now, here's what I would do. I think I want to possibly do an Nvidia an Nvidia bear call spread on it, because I do think that people are expecting a lot of this, and I don't know what's going to happen, but I do think that we may get a pullback a little bit after earnings, but this is just a very, very strong chart. So I don't even think we'll get a pullback off after earnings. Where is it buyable? Well, I do think it's obviously buyable at the pivot, which is 589.07. It's 539.91. Where would I buy it? Well, I would probably try to buy it at the 21-day exponential if I was going to buy it, and that's 514.50. So I don't know if it's going to pull back that much, but I wouldn't get out of this. It's looking pretty good. It's looking like it's moving right up the line. So I can't really say anything bad about it. GRMO, I can't really say anything bad about it. I think it's very strong. So there you go. All right. So where do you see Tesla in 6 months? Well, I definitely see it above 502. I think that we're going to see towards the end of the year, Tesla is going to be trading probably above $500, and this is basically due to the fact that I think that they're going to get their delivery situation under control, and when they do, I think that's going to be very profitable for them. So I do see them becoming more profitable towards the end of the year, especially because the deliveries are going to go up. So that's one of the things why I don't think you want to short Tesla. I do think we're going to see it north of the pivot 502 by the end of the year. Now, where will we see it after earnings? Who knows? Right now, it's been pulling back a little bit. I do think that people, again, are underestimating Tesla. I really do. I think, you know, all the people on Wall Street are saying, "Oh no, you can't do this." But I think yes, it can, because I am showing, at least on the chart, I'm shooting at March right up this line, right up the 50-day moving average. So let's see where it will be by the end of the year. Well, let's see if I can give you an idea of kind of where it will be. I do think it's gonna continue at basically. I think what's going to happen here. Oops, we're sort of in a consolidation. This is a consolidation, and I do think we're going to move higher. But once we break out. Once we move above 502, the game's on. I mean, once we break above 502, it's going to move higher. Now it's going to be in a consolidation until it gets to 502, and I do think that's going to happen before the end of the year. I think next year, or even in December, this can be very, very strong. So I think once it reaches 502 and it sticks there, then I think you're going to see it move much higher than it is currently. But right now, it is getting a little bit of resistance coming up into earnings. So we'll see how it plays. That's why Wednesday is so important. DHI still worth buying until stimulus passes. Let's take a look. Yeah, this is another thing too. I think you have to be very careful buying at this point because of stimulus. Things could change just totally on a whim. Now, DH Horton, you know what? I think it is worth buying. This is one of the ones that I do think is worth buying, is DH Horton. I do think that, we're just coming into a very strong season for new homes, and DH Horton is the biggest in the world. So this is a very, very good company. We're right in the buy zone right now. This has got a lot going for it. DHI. Yeah, look at that. Look at the checklist. Checklist is excellent. It's 8 out of 9. The funds are moving into this. This is very good. The industry is just doing tremendously. 6 out of 197. Man, I think this is worth buying. I don't normally say that. I mean, I usually say watch list it and then come into it, but this is definitely one that that I think is definitely worth investing in. I probably will be watch listing this for the small portfolio, and I probably will buy this because I do think that DR Horton is good. I do think it's the best of the breed. So that is an excellent question. Thank you, Dinesh. Appreciate it. That's very good. I think you're on the right track with DHI. I really do. I like it. Fastly. Talked a little bit about Fastly. I'm gonna skip down to another question off of the chat. So let's see. Okay. I want to become famous. Okay, well, I guess I do. Nvidia, we covered that. So thanks for the confirmation. Okay, absolutely. Yeah, thanks for watching. Please, thank you so much. And by the way, we're at an hour, right an hour, and I typically end the show this way. But before we go, just wanted to show you how to get to Dallas Trading Floor. It's www.Dallas Trading Floor, and it looks kind of like this. And to subscribe to the free trade alerts, first and last name, email, hit that subscribe button. Of course, it's free. And we have the Learn to Trade bookshelf, but we also have all of the other things on YouTube. So if you want to see how the past any of the past shows, we have them here. So, and they're categorized as we go forward on that. So this is this is how you get on the trade alerts, and of course it's free. So without further ado, I will see you all tomorrow. Hopefully my sound will be better than it was opening the show tomorrow. And everybody, See you tomorrow, and at 2:30, happy trading.